Bloomberg Audio Studios. Podcasts, radio, news.
This is Bloomberg Businessweek. Insight from the reporters and editors that bring you America's most trusted business magazine. Plus, global business, finance, and tech news. The Bloomberg Businessweek podcast with Carol Massar and Tim Stenovec on Bloomberg Radio.
All right, folks. Focus with us because there's headlines constantly coming at us. We do want to talk geopolitics. That's what we begin on this Wednesday. President Trump's idea of depopulating and taking over Gaza was broadly welcomed in Israel, with officials praising the surprise proposal as a means to beef up security following the war with Hamas. We were following that story late yesterday and obviously into today. And just moments ago, Tim, noticing AFP coming out and saying that this is from Secretary of State Marco Rubio of the United States, saying that the president only wants Palestinians to leave Gaza temporarily while the territory is reconstructed. So, again, it feels like a little bit of a rolling back of what we had yesterday, Tim.
Well, to that point, the White House saying, and this is according to Fox News and the Washington Post, that Trump has not committed to putting U.S. troops on the ground in Gaza. So a fast-moving story here that we're continuing to get clarification on. Yeah,
and these are all important details. I should point out, though, in the Arab world, his suggestion of taking over Gaza was taken very differently. Saudi Arabia called the plan an infringement on the legitimate rights of the Palestinian people, and that was a position echoed by governments across the Middle East. So let's get to our roundtable. With us right now is Bloomberg Opinion International Affairs columnist Mark Champion. He joins us from London. And then in D.C., we have Dana Stroll. She's Senior Fellow and Research Director at the think tank, the Washington Institute for Near East Policy. Among her roles in civil service include from 2021 to 2023, she was Deputy Assistant Secretary of Defense for the Middle East. And that, of course, is the Pentagon's top civilian official with responsibility for the region. So great to pairing, I should say, to talk about what's going on in the Middle East. Welcome to both of you. Mark, I do want to start with you. Your column today makes the point that President Trump's proposal to take over Gaza may be more serious than initially thought, with language and logic similar to a real estate developer's approach. Again, we just got some headlines that there seems to be some clarification that he doesn't necessarily maybe mean to take it over completely, but you say we should take this seriously. How come?
Well, I think that what I'm trying to say is that it's clear that he and the people around him think in these terms. They've been talking about this, Jared Kushner, his son-in-law, who's in real estate, Trump himself, and of course, his special envoy, Steve Witkoff, also in real estate. And this, I think we should take seriously that this is the way that they think about these things. That said, this is clearly very unlikely to go anywhere. And what worries me slightly is that, here you are at a juncture, you're in a peace process that's in several stages. The second one is going to come up faster than we, than think. And it will require the kind of further forward-looking strategy and planning in order to get that through, that has not been there until now, because Israel has not been willing, and certainly Hamas has not been willing to engage. So what worries me is that the administration will be thinking of and talking in these terms, right, which really aren't going to go anywhere. And in the meantime, we have an unsolved problem that will simply return to fighting.
Dana, come on in here. I'm wondering if given your experience in the region, your experience when it comes to diplomatic affairs, if you see this as having any weight to it, or maybe perhaps an off-the-cuff remark, or something that doesn't necessarily or should not necessarily be taken seriously. How are you looking into it?
Well, first of all, I don't think it's an off-the-cuff remark. I think it's quite consistent with the negotiating strategy we've seen from President Trump in just his first 2 weeks in office here, which is to create a crisis, mostly with words and threats, animate his team to then have back-channel negotiations, which de-escalate a situation. And then largely, if you look at Colombia or Mexico or Canada, each government has come with modest or moderate reactions that appear to address Trump's concerns, and then all of a sudden there's a delay in what he has promised in terms of a harsh response. In this case, Netanyahu was about to face a fork in the road. If the Gaza ceasefire moves to phase 2, Israel would have had to end this war. And we've seen with all of these hostage releases, Hamas come out in their uniforms. It certainly doesn't look like the total victory that Prime Minister Netanyahu promised the Israeli people. Now, rather than talk about what Israel's going to do or the Palestinians or the region, all the talk today is about what the United States is going to do. It's totally shifted the dynamics and the focus of this conversation. And I think Trump knows exactly what he's doing here.
Well, and that's a really good point. And, Mark, come on back in, because I think some of what we've been hearing is that, this is about President Trump taking the focus of what really matters. What is the next phases of the ceasefire between Hamas and Israel, and really figuring that out. Do you agree that it's kind of like the flashy thing, look over here, but it kind of gets everybody off the hook of thinking about what's the next phase of this ceasefire?
I think it is. I do think that's part of what he's doing. It's simply that I don't believe he has a thought through strategy that he's trying to, unlike with the trade, where, he had things that he could get. I simply don't think that he has a strategy that will be able, to get a movement forward, to get the Israelis on board, to get to a place where you can have a serious proposal. And therefore, this kind of real estate talk and so on, I think it is serious in the sense that it's a real distraction. I take it that he knows what he's doing when he's throwing up all these, balls of fire in the air, so everybody's looking a different way. But you need to have something underneath there that you can realistically get people to do, and that I think is missing.
Dana, one of the things I think we keep thinking about as we watch, what's been going on in terms of threats of tariffs, then maybe a little bit of a rollback, and or things change or they're postponed in terms of their enactment. Having said that, we thought about with tariffs, what's the goal here of President Trump? What's the goal here, in your view, of President Trump in terms of meeting with Benjamin Netanyahu, and what his real aim is, President Trump's aim is for Israel and for the Palestinians?
Well, first of all, what Trump wants is Israel's security, and he doesn't want to see Hamas return to a position of governance. And right now, the Arab leaders of the rest of the Middle East aren't really cooperating. They're unwilling to commit any sort of security presence or boots on the ground, meaningful resources beyond humanitarian aid, pressure on the Palestinian Authority in terms of what its leadership could look like in Gaza reconstruction, or an actual day after plan for Gaza. All he's heard from Arab leaders is mostly no, what they're unwilling to bring to the table. And now you see the dynamics sort of shifting. And of course, next week, the table is set for King Abdullah of Jordan, followed by perhaps Egyptian President Sisi, all coming to Washington. And this is going to be the focus. So you see a lot of movement because of what Trump has said yesterday.
Mark, does it threaten relationships that the U.S. has in the region, such as President Trump's relationship with the Kingdom of Saudi Arabia, for example?
Well, not at this point. I do think that there's a huge difference in the situation between his first term and this, his second term. In his first term, the interests of the Gulf states and Israel were more or less aligned. Their biggest concern was Iran, the threat from Iran, so he was able then to get the Abrams Accords, and after that, the Biden administration was able to talk to the Saudis on about similar deals, because there was no real impediment. And this time around, since October 23, when you've got you've had the war in Gaza in between, and also the sort of interests of Saudi Arabia in particular have changed, much more focused on the economy and stability, less worried about Iran. You now have a different situation, and I just think it's going to be quite difficult to bring these different interests together where you've got the domestic political concerns of Saudi Arabia and the Gulf states now focused on their own populations and their view of Gaza. And it just makes it harder to bring everybody together. And I'm not clear that he's got a plan for that.
Dana, when we think about what is the plan, though, for Palestinians, Mark's column gets into, Gaza is a demolition site. It's a mess. And to think about the Palestinians going back there, I mean, how do they live? There's no infrastructure. So there needs to be some kind of rebuild. And you do wonder how this happens going forward. How do you see it playing out in terms of,
First of all, the estimates for the cost of rebuilding Gaza are upwards of $80 billion, and we're probably talking about decades to clear out the rubble and rebuild Gaza. So there's not really a temporary relocation of Palestinians. Mm-hmm. And based on past U.S. experiences, for example, post-conflict reconstruction in Iraq and then Afghanistan, the difference in Gaza is how concentrated the destruction is and the closed nature of the border. So civilians can't move around when we're trying to get ordnance, unexploded mines and bombs, and the rubble cleared out. So this was always going to be a huge challenge. Just on the remarks about the region, what's totally different from Trump's first term is the strategic nature of the Middle East. Iran is more vulnerable today than it ever has been because of Israel's military strikes that have taken out its air defenses. Bashar al-Assad is gone in Syria. There's also a ceasefire in Lebanon and an opportunity to reimagine Lebanon without a stranglehold of Hezbollah governance, and the same thing in Hamas in Gaza. Trump can't do this alone. He needs the Europeans, he needs the Arab leaders, and I think there's an opportunity here for different leaders to bring things to the table. It's not only about Gaza.
Well, Dana, sticking on Gaza, it does raise the question of what the future of Gaza is if this ceasefire holds, if and when the war does end. What is the plan for Gaza if the United States does not go through with the plan that President Trump said yesterday at the White House?
On the current trajectory, without anything other than what we see right now, Gaza is probably going to become something like Mogadishu on the Mediterranean. There's no non-Hamas alternative to governing Gaza. We've seen that there's plenty of Hamas guys who have come out of the tunnels, put their uniforms back on, are distributing humanitarian aid and telling people we're going to help you get back to your homes and we're going to help you rebuild. So that means that Hamas reconstitutes, it regains governance over Gaza, and its remaining leaders have already threatened to do October 7th over and over and over.
Yeah, so hence you understand the difficulties in figuring the way forward and what really is the next step. Dana, thank you so much. Really appreciate your input. Dana Stroll, she's Senior Fellow and Research Director at the Washington Institute for Near East Policy, and someone who has been on the inside within the U.S. government, really understanding and working on this region. Dana, thank you so much. Hey, Mark, before we wrap up with you, we did want to ask you about Russia and Ukraine, the role the U.S. and President Trump will play in what happens next. We know U.S. allies expect the Trump administration to present a long-awaited plan to end Russia's war in Ukraine at the Munich Security Conference in Germany next week. This is according to folks in the know. You've got a second column out today about President Trump saying he wants some of Ukraine's resources in return for continuing aid. You note that this is a price worth paying. Why?
Well, first of all, it's something that President Zelensky of Ukraine offered. So he put out this victory plan last year, and one of the 5 baskets in there was incentives for the West. But it's quite clear that he had a transactional Donald Trump in mind. Incentives to say, look, you're not just helping us, you're helping yourselves. After the war, we have a lot of resources, and we're willing to open them up and make them available to you. So there's lithium, there's magnesium, there's a number of different resources that would be useful in industry and the EV industry and so on. So he was just, it's already there, offered. Trump has taken up the offer. It's exactly what Zelensky was trying to do. And, given Europe's weakness militarily, its failure to really build military capabilities, once it became clear that the peace dividend of the Cold War was over, it really isn't able to do it on its own. So Ukraine needs the U.S. and Europe. Is, if you could describe this as the price that Europe should be willing to pay, allowing the U.S. under Trump to have access to some of these materials, just keep quiet about it because they need the American military. They need Trump.
Mark, we're 3 years into this war, though. How does this actually end it?
And just got about 30 seconds, Mark.
Yeah, I mean, we'll see what the U.S. plan actually is on offer. There are ways to do it. I've written about it, but it's really not going to be easy. An instant overnight deal is highly unlikely.
Yeah, there's a lot. It's a full plate, certainly, when you look around the world. Mark, thank you so much. So appreciate you weighing in on both what's going on potentially in the Middle East and then, of course, the ongoing war there in Russia and Ukraine. Bloomberg Opinion International Affairs columnist Mark Champion joining us from London.
You're listening to the Bloomberg Business Week podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Quite a bit of news in the world of venture capital. Cherry Ventures, it's a VC firm based in Berlin, has raised $500 million in funding. That's to back European startups that come in from our Bloomberg team across the pond. And the VC firm General Catalyst, Carol, check this out. They're getting into wealth management. They hired 20 former staffers from First Republic Bank. Remember, it's one of the casualties of the 2023 regional banking crisis to create a wealth management business. I wonder if you're going to be able to get those 2.5% mortgages that First Republic was known for.
Yeah.
Maybe the 1.9% that I've heard of.
Maybe not anytime soon.
No.
Jeff Grabo is with us. He's U.S. venture capital leader over at EY. He joins us here in our Bloomberg Interactive Broker studio. Hello. We were remarking that it's been since pre-pandemic that you've actually been here in our studio. It's been a while.
Yeah, it's great to be back. Thanks for having me.
Well, it's great to have you here. The M&A market has gone through a lot, just like the rest of the world, right? Through the pandemic, coming out of the pandemic, dealing with a higher rate environment after a very low rate environment. The cost of capital was nothing. How would you describe the venture world right now?
So it's a very interesting time in the venture world because the pace of change probably has never been greater. I was just up on Sand Hill Road on Monday with a top tier AI investor, and he was remarking at how fast he's amazed at how fast things are going. And that's something that we kind of expect. And I'm drawing a lot of analogies to kind of what's happened in through the internet phase.
Is it really a fair comparison, do you think?
I think so. And is it exact? Time will tell. But there is so much change. There is so much. You take a step back and look at the big picture. What were we going to do on the internet? Well, we were going to do I was going to buy something. I was going to, catalogs. Oh, by the way, I would never have to make another catalog if I was a company. It was just, I would put it up there and then I would never have to reprint it. And if I wanted to just do it. But now you think about, 25 years later, if the internet went down, the economic engine of the United States runs and the world runs on the internet. So,
yeah. I was going to go ahead.
And so I think that has that same possibility in a lot of, with AI and some of the things that are happening now, but the stack is being built. And over time, that will grow up and build, and then it will collapse, but you'll have just much more efficiencies.
Who's the company that sends out that huge catalog, Restoration Hardware?
RH.
Yeah, we just got that.
Yeah, I know.
It went right into the recycling last night.
It's multiple ones usually, right?
Yeah, it was like they didn't get the memo of the 90s. Is it moving even faster, though, than... I talked to somebody today who's in the AI space, and he said, things move. We're talking 3-month increments for revolutionary changes here.
That's what it feels like. And it feels like it is faster. And part of that may be because of all the capital that's out there. We have multiples of capital that are available through the venture pipeline. The world has become flatter. You've got more international participation, both from an LP perspective, putting money into the pipeline, as well as direct investments. So it just feels like, and one of the byproducts of that has been, in 2005, there were 5,000 venture-backed startups. At the end of 2024, there are 55,000 venture-backed startups in existence. So a venture cycle is about 10 years. Do the math on that. You've got multiples of venture cycles in 20 years.
Is there a pets.com version of the AI era and exuberance?
Well, you're always, it's funny because you always, are we going to ultimately get...
Pets.com, of course, being...
A flop.
A flop.
You could say Webvan, too. Webvan is another.
There's many of them. Like, you just threw .com, right? And, like, there was just models that didn't have any kind of financials or profitability behind them. And it was just like,
There will be companies that don't succeed, but that's not necessarily just part of an era. That's part of the business. You think about, this is a portfolio management business, and I have to produce outsized returns on the amount of money that I raise if I'm a venture investor.
Right.
So I have to take some really big swings, and you know what? They're not all going to work out because we're making bets based upon what we know today. What is today will not be what happened. It was what is going on in 3 years.
So do we get a bubble?
There will be over
Have we kind of
exuberance.
had a mini one?
There will be over exuberance
Okay.
just because there's so much capital.
Okay.
But you never get advances without taking those kind of leaps.
What was the reaction on Sand Hill Road about DeepSeek?
Well, I think we can't really comment directly on companies, but I think at some point you see the technology wave happen where costs always come down, and you're always going to have to be dealing with cost curves. And so, as I was talking about earlier, you have a scenario where 30 years ago, you would raise $50 million to spend to start an internet company. Today, you can do that for $50,000, and you can do it on consumption on a swipe of a credit card, whereas before you had to add full cost of ownership. So you're going to see AI do that. That's why I talked about the AI stack collapsing. It's getting built up because it's being created, and then at time that will happen. It happened in networking with boxes.
I'm not asking you to comment on DeepSeek. I want to know how freaked out the venture capitalists are about the billions they've invested in the AI companies that seem to be less efficient than DeepSeek.
Well, we don't have all the information on what's really happened and what the ramifications are going to be. I think you, as an investor, you always need to be taking into consideration what you're seeing. So I think one of the things, that will be one of the things that may not have been talked about a lot is you'll see more open source. Because a lot of this stuff, a lot of the investments have been in closed environments, and open source is cheaper. It's cheaper to develop. It's cheaper to license. So that may be one of the byproducts. And if we've truly reached efficiencies, then you can start to build on top of that stack and start to build the pyramid up.
I mean, isn't that something venture capitalists do? Like, it's about disrupting kind of the establishment. And already you might say that NVIDIA is the establishment or OpenAI is the establishment in AI. And so the expectation is that, sure, we're going to come across probably a model that costs a fraction of the existing AI build that we are talking about today. And who knows how long that takes, or maybe it's already happened. We don't know. You're right. DeepSeek, we have to find out a lot more information. But is it kind of the venture perspective that, of course, we're going to find probably a faster way to do this, a cheaper way to do this?
That's always, and that if that wasn't that proposition, there wouldn't be a venture business. It's innovation, it's driving change. And so,
does that mean investors, the established investor who has plowed a ton of money into NVIDIA, and NVIDIA so dominates the market that there's a possibility that they're not the ones who dominate going forward?
That also may open up opportunity because, think about, we're early. When you think about the visions that have been painted out, and I was talking about this morning, there was a talk a while ago about internet first, the first people who are the internet first workforce. Well, just think what happens when you get the first AI workforce. And what the capabilities that they have. A lot of the stuff that they will be using, I'm talking 20 years from now, haven't been built today. That needs to get built. So, but you need to have foundation, and you need to have that foundation and infrastructure laid. It's the same thing, the other analogy to look at is internet building, if you remember during bandwidth, everybody said, oh, we have so much bandwidth. Overbuilt bandwidth, we'll never use it. Well, guess what? We burned through that usage in a fraction of the time anybody ever thought it was. So oftentimes when you find you have abundance and overbuild, you don't necessarily have that in these technology markets because it gets used up, and that is also the mother of invention and innovation.
Where's the money going now?
So Obviously, AI. AI is taking up about 40%.
What kind of AI, though? Like what?
Well, obviously, we've seen a lot of foundational model things. We've seen some open source things, starting to see applications going after professional services. We had that conversation earlier this week on Sand Hill Road. The other thing with the classification, it's going to be, that's going to be a little squishy because right now, if you're not, we are in a have and have not environment. I talked about the 55,000 venture-backed startups in the world. About half of them haven't raised in 3 years. So you're going back to market in an AI market and having to sell a story. So you're going to have to pivot. So a lot of people that may not have been AI native companies now are positioning themselves as AI companies. So you're going to see that number influenced by that.
I mean, how many of them are of those? They have to go back for more money, right?
Yes.
I mean, they're not ready to go public. They're not ready to what have you.
Mm-hmm.
What kind of money is out there?
So in that 55,000
to invest.
Dry powder is about $310 billion.
How does that compare with where we've been? I don't know, the last couple of years.
It's about par. It hasn't grown substantially because the past couple of years have been down fund formation years, and it kind of dropped. It lagged the investment cycle by about a year. So in 2022, things slowed down in venture and the investment side, and then 2023, the formation side started to slow.
Right.
But 2024 was an up year for the first year in 2 years on a investment into companies.
Last year.
Yep.
Okay.
Do you use AI in your job?
Yes, I do.
How do you use it?
I use it to help distill information. We've got something called EYAI that basically it's kind of our large language model that we help feed information into.
So essentially, I'm guessing it's built on a LLM, like an OpenAI, for example, ChatGPT. It's built on something like that, and you copy and paste a large document into it and get it summarized. How do you do it?
Summarization, helping to analyze. A lot of it's how do you prompt in? That's a key of how you can help get better value out of it. Is what are the questions? And it's funny. It used to be, now our tagline is all in. It used to be ask the better. One of the things on our EY Private is ask the better question.
Yeah, and if you become a better prompt engineer, right?
So if we ask the better questions, that helps distill. And that's actually when you think about the AI workforce, that's going to be critical thinking is going to be something that's very important.
We were talking to Mandeep earlier from Bloomberg Intelligence, and we were off mic and we were talking about AI, and he was saying everybody who you have to embrace this stuff. You have to experiment with it. If you want to understand the technology, you got to start using it.
Ethan Mollick, who we have had on, he's author of Co-Intelligence, Living and Working with AI. He's basically like, if you haven't been working and playing with it, you are behind the curve in a big way.
I'm telling you, that chicken marinade.
And by the time you see it, it's too late.
Yeah.
That's the thing. That's why you have to be ahead of the curve.
Playing with it on my phone a little bit. Jeff Graybo, thank you so much. U.S. venture capital leader at EY, joining us right here in our Bloomberg Interactive Broker studio.
This is the Bloomberg Business Week podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Once again, check of the stock market. Charlie giving us an update there. Carol, we are flat. It's yellow on the NASDAQ. You don't see that every day. It's not red, it's not green, it's yellow. 0.3% to the upside on the S&P 500, 0.7 on the Dow to the upside. Let's drive to the close and get an idea of what Jeanette Garrity has to think about these markets.
Yeah, exactly. She's managing director, chief economist over at Robertson Stephens, a wealth management firm with more than $7 billion in assets under management. And she joins us on this Wednesday from Menlo Park, California. Jeanette, good to have you back here with Tim and myself. A lot coming at investors right now. We are seeing stocks, though, pretty much at their best levels of the session, but just a little bit higher here. How are you looking at this investment environment? Are there more opportunities or more reasons to be cautious?
Well, there's a lot of opportunities, and I think your previous speaker was highlighting some of them. There's a lot going on. Sometimes there's a little bit too much going on. I think that's been maybe the story of this week. And the markets appear to be, and I think most investors are sort of saying, okay, let me focus on the fundamentals as they are and look forward. And the economic fundamentals are very good. It's an economy firing on all cylinders right now, and I think that's carrying through on how people are thinking about the immediate opportunities. Having said all of that, there is risk here that things get disrupted, even sometimes just by the things that are talked about. One example of that would be, the manufacturing sector is now growing again. It's actually been in a bit of a slump for a couple of months, as indicated by the purchasing managers' indices. And now it's picking up, and you can see things picking up in January. What remains to be seen is to what degree things kind of come to a stop for a minute while people try and figure out what the real substance is in the discussion of tariffs or anything else.
That's what we're trying to figure out right now. I mean, I was joking earlier today. It's like, is it only Wednesday? Because it feels like we've been talking about tariffs for 2 weeks at this point.
Well, we expected it on day one because that was such a big part of his campaign, right? And then when it didn't happen, we were kind of like, wait, what's going on?
What were your clients doing on that? Were they calling you Monday? Were they calling, trying to figure out, okay, what's going on here? Or is everybody, because they've seen this movie before, they're just like, okay, sit back and we'll wait to see what he does?
Well, to a certain extent, they've seen this movie before, but not quite in this way. And so I think most of our clients, we were talking about to them about this some time ago, per the point that this should not be entirely a surprise. The speed, the magnitude, the lack of clarity as to what the objective really is, I think, is what surprised people. Yeah. As they say, if we can understand why this is being done, then that gives us a certain amount of sense of certainty. But that's been hard to absorb. But there's not enough there for them to be worried about yet. They're just a little bit worried. All right,
Jeanette, thank you so much. Jeanette Garrity, she's Managing Director, Chief Economist at Robertson Stephens.
This is the Bloomberg Business Week podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.